Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good afternoon. This is Your Stocks. I'm Mangla Malu. With me is Sumera Abdi. Sumera, it's a volatile day barring the PSU banks. They took off in the last couple of minutes, so the likes of Punjab National Bank, etc. should come up for you. They're buzzing, but by and large, a choppy Friday.
Yeah, that's true actually. But, the thing is that Europe is taking a bit of a hit because of the resurgence of these trade war fears. But luckily, our own market has not reacted to that so much. So we're pretty close to the highs of trade. Let's see what the last 1.5 hours brings. But first up, our top stories. Right, well, today is Friday, so that means on Your Stocks, it's Ladies Special, where we'll answer all the queries that are coming in from our women investors. Joining in this afternoon, we have two gentlemen, Ashu Madan and Prakash Gaba, who are waiting by to answer all of these queries. So, gentlemen, good afternoon to both of you. Our first caller is through to us. Sindhu G is on the line with us from Bengaluru. Hi, Sindhu, go ahead. How can we help you?
I have about 500 shares of Lupin, which I really bought at a very high price, actually. I do track it fundamentally. What concerns me basically is now that the guidance is not so great, but I do believe in the pipeline or so. I am a long-term investor. So I am requesting basically a technical view on the very same. What levels would be good for me to kind of, go and average? I don't want to buy it in today because it's like just because they have got an establishment report, obviously the stock is kind of spiked. So I want to know what level would be good to kind of go and average my holding right now. If I could get technical help, that would be great. Thank you.
Great. Sindhu, so to begin with, I congratulate you on the fact that while you may have bought the stock itself on a very, very high level, but at least you've tracked your investment closely and are aware of the news flow surrounding it. Prakash, she specifically requested for your help on this. The thing is, she's making a 6 lakh loss. Her investment has almost halved. She now wants to know what's the best way out. Should she average? Should she bite the bullet? Should she wait? I mean, basically, what are the key levels that you can help her with?
Basically, pharma stocks are not doing well these days. Last couple of months, we've seen that. But basically, when I look at the Lupin structure is weak, so it's likely to come down. What we are seeing the move is a good up move. This is what we have seen this month. If it sustains here, then I would say perhaps this is the bottom. But I'm not very sure if this is the bottom. There are two areas I will look at to buy. The best place is around 600 zones. I'm not saying it's going to come down there, but if it comes down there, yes, that's a good place to buy. The only strategy that would be okay with you is to add around 600. You can add here as well. If it breaks 750, nothing to worry. You can add more at 600. So if you don't miss the bus, but what you add need to be sold as well if you want to reduce your cost. What you add, you sell around 1,000 rupees. Then again, you might find a dip again. So the idea is to buy dips and sell rallies. Strong rallies could be finding resistance around 1,000. That's the level you need to keep a watch on. But lower levels, I would add it here, A. And if it goes down lower, I would keep doing a SIP method here. I think it's going to bottom out. If not now, it's very soon.
All right, looking at bottoming out, that's the view, Sindhu, coming in from Prakash as far as the technical query is concerned. And he says that if it goes lower, employ or deploy an SIP method in Lupin. With that, let's move on to the next one. We have Usha Bansal calling us from Haryana with a query. Has investments in LIC housing finance. Usha, go ahead.
Hello.
Yep, go ahead, Usha.
Yeah, 350 shares of LIC finance company at the rate of 547. I can wait for 2-3 months.
All right, 2-3 months. Well, Ashu, for 2-3 months, do you have a view on LIC housing finance, or do you think the person should extend their holding period?
No, on the contrary, LIC is basically has become more of a trading stock than an investor's delight. So I think 2-3 months is the right method to trade in LIC as far as I believe LIC housing finance. So I think it is in the range of 500 to 600. It went up when there was so much of euphoria surrounding NBFCs. It came down along with the correction in mid-cap stocks. Again, now the bounce back is happening. So I think at max, I would say the bounce back could happen closer to 600. So I would say trade this stock between 500 to 600, closer to 500 one can buy and closer to 600 one can sell. So I think that's the trading range. I don't see it running away beyond 600, 610 in any kind of a market situation as of now. But I think, I mean, it's a good trade. One should wait closer to 600, book profit and wait for lower levels to get in.
Prakash, your take?
I think LIC certainly is looking good to me here, and I would say the best thing to do is to add. LIC Housing Finance could see a bounce from here. Only way is to A, hold, B, add. You can add around zones because 500 seems to be a very strong support zone for LIC. I don't think it's breaking 500. So these are the zones for adding it and hold for a long time.
Let's get to a CNBC TV18 exclusive right away. Sources tell us that Centrum Capital, which recently sold off their forex business, have now initiated preliminary discussions regarding their insurance foray. Yash Jain joins in with the details. Yash.
Well, Sumera, as you rightly pointed out, Centrum Capital very recently sold its forex business for about 1,200 crore. Interestingly, the management on CNBC TV18 had said that the company wants to enter the insurance space. What I'm given to understand here is that Centrum Capital has initiated preliminary discussions with this company called Aspire Health Insurance to make a brownfield foray into the standalone health insurance space. If you look at this company, Aspire Health Insurance, it's a three-way joint venture between this private individual called Rajesh, who's the former MD of PNB MetLife, a Hong Kong-based equity firm called Macquarie Investment Fund, as well as a domestic private equity firm called Earth Capital. And essentially, if you look at this transaction, which is at a very preliminary mode at this point of time, Aspire Health Insurance would look to issue fresh equity to Centrum Capital to make it the fourth partner in this already existent three-way JV. We have reached out to Centrum Capital on this particular story, and the company has said that these are pure speculations at this point of time, and they are in no discussion or they do not intend to acquire partial or complete stake in Aspire Health Insurance.
All right. Thanks a lot for that, Yash. We'll keep an eye on that developing story. But let's move on to the next one. We have K. Padma writing to us from Andhra Pradesh. Holds 50 shares of BLS International at 262 rupees for the last 6 months. A long-term investor wants to know whether to hold or sell. Ashu, BLS International, remember the management coming on our channel very often and saying that they are looking to increase the number of passengers that they deploy for visas. The stock is 52% of its 52-week high. What would you suggest on BLS International?
See, it's a good stock to hold at the current level. I know the problem happens at times is when you buy a stock at a peak, a euphoric peak, not just peak, the euphoric peak, and typically happens with the mid caps. Otherwise, if you at current price, if you look at the business model, I think they have a low capex model. They're trying to increase the traffic, and it's a good company to hold. I mean, this model should work in the times to come. The way, I mean, the passenger traffic is also growing. So everything put together, I would suggest to hold this stock, and if even if it's a small investor, one should add at a lower level so that average it out. You may not see that higher price, but definitely some bounce back might happen sooner or later. So wait for some time, average it out, and because if you'll keep holding plain vanilla stock for your exit price to come, which is almost, I mean, 100% above this level, which doesn't typically happen in mid caps. So I would say hold, buy, average it out, hold it for some time, and maybe at some reasonable price. Whenever we see this up move, one can get out.
Yeah, that makes sense. Prakash, what's your take? I think after a long time, the stock has seen a good week, and you know that too ended, I think, on Thursday. But what's the sense now for this investor? What should they do?
When I look at this technical structure, it is weak. You rightly said it. Yes, after a long time, it's seen a good week. But incidentally, this has taken a good week here compared to where it listed somewhere closer to 100 zone. So 100 seems to be a psychological support here. So quite possible this is a place might be defended and then may go up from here. Since Ashu likes it, okay, I would say that I had felt that the structure is weak. But I feel that maybe one could just continue holding it. If it's bouncing back, then maybe we can see a bounce from here. So I would say just add it if you want to, but exit closer to 160, 170 zones, because I don't see the structure. I don't see it going up to its cost price very high. Like you said correctly, yes, you might get a little higher price to sell.
All right, you might get a little higher price to sell. That's the view coming in on BLS International. Before we slip into a short break, just pull up the intraday chart of United Spirits Friday special. That one is spiking up and is at the high point. We're talking about United Spirits, but Radhiko Khaitan says, count me in the party as well. Radhiko Khaitan should come up for you. That one has spiked to the high point of the day. Along with that, we have a couple of the other FMCG companies too spiking. Colgate, for instance, that one's moved to the high point of the day. Along with that, we have the biscuit maker, Britannia. That one too is at the high point of the day. Let's go on. Then we have Anita Singla writing to us from Delhi, holds 100 shares of Reliance Industries at 940 rupees for the last 2 months. A long-term investor wants to know whether to hold or sell. Prakash, coming to you first, 940 over the last 2 months ago is what her purchase was. For the long term, do you think those are good levels?
They were not a good place to buy, actually.
Okay.
We've seen a good up move from the levels of around 540 after the split and things like that. Way to 1,000. You know, 1,000 seems to be a psychological resistance. That's what's seen it. So possibly we could see some more slide to around 820 zone. That's a place I would add Reliance if it comes down there. If it doesn't come there, hold it. Good for you. But if it comes down, add around 800 zones, 820.
Okay, so that's the technical view. Anita, for you, that should you see levels of 800, you must look at adding to your current investment. Ashu, what's your sense? Advisable to stay invested for the moment?
After many years, it has broken out. So I think all the weaker hands or the bulls or the tired bulls for many years offloaded it, got out. So I think 900 around, it is consolidating. Probably, I don't see much price correction, but there could be a time correction. But for a long-term investor, that should not be a deterrent. So obviously, at a dip is a buy. I see probably the target of 1100 to 1200 in the times to come. It may take some time, but I think the pattern looks very bullish. As I said, all the tired bulls of many years are out of this stock, and now, I mean, Jio converting into profit, and I mean, GMs in their favor. Everything is right now going right for them. So everything put together, I would say there could be a consolidation for some time or a time correction in 900 plus minus, but I think gradually it will move up. So I would say that hold definitely, and probably at a dip must add on.
All right, that's the word on Reliance. A standard disclaimer, of course, that Reliance owns and operates the television channel that you're watching. Our next query comes in from Kajal Agarwal, who writes to us from Odisha. She holds 1,500 shares of Mandhana Industries at 22.1. She's been holding on for 7 months. She's a long-term investor and wants to know whether to hold or to sell. So Mandhana for today, well, up about 9%. Ashu, what's your advice for the investor?
Very high level debt company, quarterly results bad. I think nothing is going good for them. I think somewhere you have to bite this bullet and probably book this loss. It's a futile holding this stock. I mean, see, one out of five such stocks might see some move up, but I think that's not the discipline to hold the stock. One should get into, I mean, try, and I would still say that even if it's because normally it is a valuation game, but a lot of people go for the absolute value. So even if at absolute value of 22 rupees, I would say switch into probably an IFCI or GMR. There is a fair chance that they might go up and give you a 50% return on some positive news flow. But I would suggest to exit Mandhana.
All right, exit Mandhana, that's the word coming in from Ashu. But wonder why Kajal really bought it, because if she's a Salman Khan fan, the being human part of the business is actually Mandhana Retail and not Mandhana Industries, which Ashu said is a debt-beleaguered company. Prakash, I know you're a Salman Khan fan, but Mandhana Industries has nothing to do with Salman Khan. Retail business has being human. What is your view on the stock, Mandhana Industries?
I don't like the stock. I like the guy.
Okay.
All right. Stocks actually heading higher. Look at NTPC. That stock has seen quite a move actually from the lows, sitting very close to the high point now. And the other one in focus remains from the broader markets. GMR Infra now up about 7% and about 2% of that has come in a quick succession. But let's get back to answering our stock queries. Mariam Painter has written to us from Mumbai. She says she holds 27 shares of Tirumalai Chemicals, which she has bought at 1,100 rupees about 9 months ago. She's a medium-term investor and wants to know whether to hold or to sell. Ashu, if I'm not wrong, we spoke about the specialty chemical space and perhaps Tirumalai itself just a few days ago. What's your advice now to somebody who's bought at 1,100?
No, a long-term investor must hold this stock. I mean, on the contrary, from when it corrected from 2,200 to almost 1,600, 1,700, we again recommended all our clients to buy this stock, because people, see, whenever there's a mid-cap correction, one has to get into a very quality stock. I think this space is really doing well, and the company is really doing well, and I mean, their presence in 34 countries and overall certain products which they are, I mean, amongst the top 2 in the world. So I would suggest that even if, again, from the lower levels it has gone up, but it can get up to, I mean, go up to much higher levels. So I think one should, if not in need of money or getting into another stock, one should definitely hold this stock, or probably at some minor or major correction should add into the portfolio.
All right, a stock to be added into the portfolio. Prakash, 2 years ago it was 240 rupees. Few months ago it was 2400 rupees. So it was a 10x from there. And now it's at 1900. Is it a good place to buy?
Of course. See, basically the structure of the chart is positive. So if you see any corrections, there are buying opportunity. We saw some corrections. And this week's, the bar that I see is good. Even if it closes where it is, tells me that the correction seems to be over. So it's a good hold A if you want to add, and just have a stop if you want to add on the what you add on somewhere closer to 1700 and continue holding it. Who knows where it goes? But it seems like 2200 is a possibility.